Hello, it's Adil bringing you a review of the US markets from an intermarket analysis perspective, starting or hopefully commencing from obviously, but it's the 20th of December today, obviously commencing from the 23rd of December onwards. Whatever's left of the market, whatever's left of the actual the year's trading. Okay, so basically, where are we? Okay, so the theme, basically, from the outset, one hell of a rally. Okay. Absolutely phenomenal, impressive rally. Okay, especially given the fact that the situation with regards to Russia and Ukraine still remains in the background. The situation with regards to commodities falling, and obviously that's sending the actual global markets into a tailspin. Given the fact that there's concerns regarding global growth, again, that's another factor. And Ebola obviously has been put on a back burner. Nobody really cares about that at all. And Greece certainly has been forgotten as well, even though they've not actually gathered the votes enough or pushed forward enough votes to actually kick out the Syriza party, which is anti-austerity. So it certainly remains a conundrum. Okay. Also, given the fact that ECB QE certainly seems to be in doubt, given the fact that there was an article out from Reuters stating that the ECB is going to put more pressure on those states, so there will be more risk for those states that are obviously have their budgets in a right frenzy right now. Okay, so there's no, so the smaller nations will basically will share more of the burden. Okay, because the Germans don't want to be sharing it, and also the national banks will obviously bear the burden of QE as opposed to the central bank, which is the ECB. So there's certainly a watered down version of QE there as well. So there's a lot of factors at play. Socioeconomics, geopolitics, and yet the market has ignored every single one, and obviously has decided to reverse and obviously move higher. And one of the biggest ones is obviously deflation. Okay, and global growth concerns. So this has been one hell of an impressive rally. Whether you want to place it on light volume, again that's debatable. Whether you want to blame it on the Yellen algos going obviously into overdrive, given the fact that it's Christmas. Again, that's debatable. Okay, so it certainly is a conundrum right now. Okay, a conundrum. That's basically the best way of explaining it and elaborating upon it. Okay, so what happens going forward now? Obviously, the onus is on Yellen, okay, and Yellen, from my perspective, was hawkish, okay, hence the reason why the dollar obviously is appreciated, and you've seen the Aussie, the Kiwi, and the Euro obviously fall quite substantially. So, if Yellen is obviously hawkish, and given the fact that she's talking about interest rate hikes, etc., even though other members have actually come in and actually questioned that, the fact that even though inflation remains low, why is she being so hawkish? So that technically should send shivers down the stock market, and that should technically have kept the short stock market at bay. But given the fact that his short squeeze went back to the highs, that again is very confusing. Okay, very confusing. Okay, so let's have a look at the technical picture. So the S&P 500 is obviously into horizontal resistance. The Russell 2000, which confirms that, and the Russell 3000, as you can see there, is into resistance, and the Russell 2000 also is into horizontal resistance. So if the Russell 2000, 3000 and the S&P are all into resistance, that means the US market will certainly be into resistance. Let's have a look at the Dow Industrial. Looking at a daily chart, this certainly remains weak. Okay, so again into horizontal resistance. And the Dow Transports, let's just bring that up for you. And the Dow Transports also, if you look at your daily chart, you're back into that after hitting the H&S formation. Obviously we're back above, back into that neckline region. Okay, and if we connect our downward sloping trend lines, then you'll see that we are bang into that resistance zone. So the Dow Industrials is into resistance, and it's already in a bearish pattern with lower lows and lower highs. And generally the Dow Transportation etc. index generally does give you a good insight into what's going to happen going forward. Okay, so now that we looked at the S&P and obviously the Dow, let's have a look at the Nasdaq now. The Nasdaq chart is obviously holding resistance there on the 60-minute chart, and certainly seems to have exhausted on this pullback with the unfilled gap below. Okay, so certainly into a bearish potential scenario. Again, the biotechs are back at double top resistance, so again a bearish scenario. And the semicons, if I just look at the semicons, it's a pullback, but it's a lower high. Okay, so given the fact that it's a lower high and it's a lower high pullback, then that obviously means bearish. And that's basically the way the US markets are set up right now. Okay, so every single one almost looks as if it wants to roll over. It certainly doesn't look very bullish at all. And you did have a late evening sell-off as well. That's something that we'll keep an eye out for, obviously going forward. But that's basically the main crux of the matter. Okay, so you're looking for a potential sell or a thrust come Monday, and then I'll have to assess and understand from there. The one thing that obviously I do want to elaborate upon is the yen. Obviously, the yen is an inverse relationship between the US market. So the daily chart, as you can see, has pulled back, but certainly is making a potential base now for a potential move higher. And the 60-minute chart obviously is coming into the 200 MA, and you have two unfilled gaps above that, and it certainly needs to close. So keep an eye on that. Okay, now there is a Wilshire 5000 as well, as you can see there. That's into horizontal resistance. So the conclusion is that Yellen obviously remains hawkish, regardless, to a large extent. Okay, but the main concern is even though she is hawkish, and even though the dollar is rising, etc., etc., that's really irrelevant from my perspective, because the whole concept is that she's got it wrong. Okay, she can't talk about raising rates when obviously inflation is so low, so that's not exactly a good sign. Okay, she has to do that. She has to talk about rising rates due to the ability of obviously her credibility coming into question, and obviously continuity, and obviously the professionalism of the Fed. Okay, and she has totally ignored the concept of obviously low oil prices, calling them a bonus or a positive, and obviously she's certainly focused on the fact that from her previous work she was focused on the fact that the wage price pressures were not there. The wage inflation obviously wasn't rising, so, and that obviously doesn't allow real incomes to rise. So that's a real conundrum right now, and that's going to be very interesting how they interpret that and elaborate that, and obviously the price action that follows from there. So keep an eye out for that. So technically really speaking, we are into resistance, given all the indices I've showed you. Fundamentally, Yellen itself, even though whether she's hawkish or dovish, she certainly sounds confusing, and she sounds confused. So basically that's negative for the stock markets, and obviously Russia-Ukraine situation, and watch out for commodities as well, because they are into resistance, and that could be another wave of selling if it wants to go lower. So risk on, risk off, wax on, wax off. Goodbye.